Yesterday, I saw an article on Motley Fool comparing Peloton with Disney. I know Peloton's a hot company and I love the brand, but what kind of weird ass comparison is that? I would have thought Motley Fool of all companies would be above pandering. If Microsoft is the tech giant that is too big to fail, then Disney is the entertainment storytelling equivalent. In this video, we're going to talk about whether Disney is a good investment for the next 3 to 6 months from the perspective of product and finance. If this is the type of content you've been looking for, please hit the like button. And if you're looking for more content like this, hit subscribe and let's get started. Disney is obviously a household name. It's as famous as Ford or Microsoft or McDonald's, and they've went through decades of reorganization, innovation, all of these things to stay relevant and making a ton of money, a surprisingly amount of money. I actually believe that they were losing relevance, but in the past 5-6 years, they've made the right acquisitions and they've dealt themselves a winning hand. It'll take a lot to fuck it up. And I believe that Disney has the right leadership with the right perspective from management to carry this through. Because of the COVID dip, I feel like the market has overreacted and now there is a buying opportunity. I don't think people are reading the last earnings correctly either, also creating an interesting buying opportunity. So I'm going to talk about 2 reasons why this stock is worth talking about. Then we're going to talk about the financials to communicate how safe it is for you to park your money here. And lastly, we're going to talk about my recommendations for what you should do with this company in terms of investing into it. Number 1, I believe that they reevaluated what their core user segment is, and that led to the acquisitions that you see today. And their original goal was to innovate and cash in on those core characters. You know, the theme parks, more cartoons relevant to those ideas, etc., etc. Now they're a content producer for entertainment that involves any form of compelling storytelling. This in turn led to the purchase of Marvel, Lucasfilms, Vice, the History Channel, Lifetime, ABC, Pixar. All of these are different forms of compelling storytelling with very, very different user audiences. So they're no longer a PG-13 company, they're an overarching storytelling entertainment company. It would be hilarious if they bought Pornhub if they started producing content with real storytelling. That means that unless you're a recluse, you're watching something from Disney every single week. The number 2 core reason I think Disney is worth investing in is that they are in fact future looking. Some of these bigger giants, they're so tied up on protecting their existing asset and making that into their cash cow and making sure that that still is milkable. They fail to look further into the future, right? Disney, on the other hand, made these core purchases because they've reinvented and pivoted their user segment. On top of that, they realized that the real money these days is digital distribution, binge watching, that kind of stuff. And I'd be damned if they didn't try to buy Netflix, but they created Disney Plus, and I think that is a very, very smart move. I actually used to think that it was really stupid to fight Netflix. Now that I see what's actually on Disney Plus, I have a very different perspective. The reason is that Disney has collected decades of content, their unique exclusive content. Then you add their Marvel content, then you add the Lucasfilm content. All of these combined gives them a lot of weight to create an exclusive channel where you can get very exclusive content off of it. As opposed to if you look at Netflix and Amazon and Hulu, I mean, the reason why they started creating unique content is because they're trying to create differentiation, right? Disney already has that built in. You get Disney content from the Disney Channel. It's super, super powerful for them to have the separate channel, and they're not fighting Netflix directly. Most people will eventually become a parent, and they have their own needs off of Netflix or Amazon, and then they need to have the content for their children on Disney Plus. That, to me, is amazing. They can actually coexist. And on top of that, because Disney is Disney, they have a partnership with companies like Verizon, where if you have certain types of Verizon contracts, you have Disney Plus for free, right? That helps them acquire users way faster. And we can see that. They have 50 million paid subscribers on Disney Plus. That's a lot of subscribers. We know that Netflix has 180 million, which to me means that Disney Plus has an upside of 3x what it currently is. To me, the product roadmap and its acquisitions demonstrates product sensibility and future proofing. The financials of the company tells me their execution and for my own investment, risk prevention. For Disney, it's pretty easy to talk about. They have $14 billion in cash reserves. They're operating all over the world, obviously, and all of them except the parks and attractions is growing. The thing that most people don't know is that parks and attractions only makes up less than a third of their business. I definitely expect that percentage to go down even further compared to the rest of their offerings. Now, the financials and the products combined makes this company a very, very enticing investment. The two major negatives that I want to bring to your attention is that one, most people still think that the company is a parks business. They don't really think that Disney has went digital, has went so far away from parks. And so anything bad happening to the parks, automatically the stock will react very, very violently. The first thing that should be on your radar is that the Shanghai Disney is reopening. If that doesn't open well because of COVID or whatever other reason, right? Whatever optics going wrong may tank the company real quick for the short term. The second negative is a little far-fetched, but I think is worth knowing about. I think it was around last year, Trump just randomly spewed out some comment about Google as a monopoly and it should be broken apart. The stock tanked 10% on that day is what I remember to my investment. So to me, all of these big companies are getting to that stage of looking more and more like a monopoly. They have to really, really defend themselves in court to prove that they're not a monopoly. Even with the current administration, it's very unpredictable. But if the administration changes hands, I honestly think that there's a bigger opportunity for all of these bigger companies to be hacked apart. Oh, and there's actually a third con that you should watch out for. You know, one of the problems with a company that is as established as Disney is that there's a lot of office politics. So if that's not handled correctly, then people are going to start taking off because they might want more professional growth. Somebody like TikTok offers a better opportunity and, you know, people are going to move around. Or the existing guards might not jive well with the new acquisitions. This is effectively inevitable in the tech industry, and as they go digital, it's going to happen more and more. That is a very, very big concern because they have a lot of management, a lot of leadership components, and if they start taking off, that can definitely affect the long-term growth of the company if they don't have the right leadership. Of course, I would never recommend something to you guys without my own personal investment. I am invested in Disney because I believe in what I'm pitching here. I also want to highlight that my investment is a long-term investment. I think the worst case scenario, the stock will not go anywhere far, but I'll be collecting 2% dividend. Over time, the brand will become stronger and stronger. The digital presence will become more and more known, and I'll be also building the stock value as well as the dividend. I think the upside over 2-3 years is probably 15-20%, and then you add the dividends and the fact that the company is, you know, in my opinion, a very recession-proof company. I think it's worth investing in and looking at if you want to invest in a little bit more strategic investments other than gold and silver for long-term investments at this time. All right, I hope that information was insightful. If you have any questions or concerns, please leave a comment. And if you're looking for more content like this, please hit the subscribe button. It will really help us out. Thanks for listening. I look forward to working with you next time. Thank you.